on. And like that, we're only 3 minutes behind, and we're not in the Rusty Putter. We got our special guest, Tony Perri Sr. and Nick, afraid of the camera, Perry, on the vacation edition of Not Another Three Putt here. I wanted to bring these guys on to ask them a couple questions here. And when we talk to clients about non-occupying co-borrowers and real estate and mortgage as a family business, our family's in that business, and we tell you that, hey, we need to have that conversation with mom and dad about being a non-occupying co-borrower or grandma and grandpa. We've done this before across our family, and we have a perfect description of this. So in a situation before, a lot of you guys know my younger brother. He moved to Winston-Salem, North Carolina for an advanced nursing degree, become a CRNA. And as him and my dad were looking at cost of rent and real estate in Winston-Salem at that particular time, they thought it may be more advantageous to purchase a house than to just enter the rental market, right?
Yes.
You guys weren't necessarily sure how long you were going to be there. You know, Nick moved there. It was a 2-year program. When we look at what's the cost benefit analysis and or does it make more sense, typically we find rentals in transient communities or communities with a large school like Wake Forest and Winston-Salem, rents are going to be elevated because you're dealing with risk premium to tenants that are families and or kids that may or may not trash the place. In your guys' case, you found a small 2-bedroom townhouse. I think what did the monthly payment end up on that thing?
Like $850 or something.
In the eights.
800,
All right,
with the
you gotta speak up a little bit. It's like
800, 850 with the association fee.
And your guys, the actual rent cost was probably somewhere in the $1,200 to $1,300 range.
I think it was almost all the way up to $1,600.
So you guys nearly cut that in half on a property that you were now, from a tax standpoint, you have amortization, you have interest expense, you have all of this positive stuff working for you. And then you're not dealing with, $1,400-$1,500 a month in rent plus security deposit. I think one of the bigger things that people don't understand in our world as well is you're able to purchase that. I think what did you guys do? 5 or 10% down?
10% down, and Nick was the primary borrower without a job, and then I was a non-occupying co-borrower using my income. And the other big benefit I really saw out of it is when we sold the place, he had enough money to put a serious down payment on his house 4 years later.
So that's, we talk about the non-occupying co-borrower, Nick's occupying, he doesn't need a job, and or in other situations, we also have, if you don't have qualifying income from a documented standpoint, so like, hey, I just moved and I took a job as a commission salesperson and we don't have the necessary history of commission, that works in this case. In Nick's case, hey, I'm going to get an advanced degree. I don't know how long I want to maybe stay in this area, but buying was way cheaper than renting at that point. And then exit strategy, 2 things could happen. Nick decides he wants to stay in that house longer term or stay in that area longer term. He gets his job, starts working. He has an advanced degree. We can couple that education and supplement his work history with the education part of it. And then he has the opportunity to refinance and remove my dad off of the mortgage and note at one point if he wanted to, or in his case, he wanted to move closer back to home. They sell the house. However they want to divvy up the proceeds is how they want to do it. But one of the bigger, most misunderstood pieces of that whole process is a mortgage and the mortgage note are a joint and several liability. So what that means is Nick is 100% obligated on that mortgage and note, and Tony Sr. also 100% obligated on that note. If Tony Sr., decides that he doesn't want to pay it, and Nick decides that he doesn't want to pay it, both of them would be charged with a late mortgage payment. Both of them would, if you guys go through 120 days late and continue to be late, the foreclosure process happens and it impacts both of your credit. So this isn't although it's a great way to work through a lot of the mortgage red tape and qualifying, it is a conversation that your family needs to have. I don't know, but Nick probably has a little bit longer reach than Tony Sr. here. You know, I don't know if they can maybe get up into each other, but if it came down to fighting about credit scores, I don't know who would actually win in that one. This other guy over here, Tony Sr., may have a couple dirty tricks up his sleeve, but it's a conversation to have. But when we tell people, hey, we've had these conversations, we've done them personally, we've worked through this, we really mean it. Other situation, we don't have my sister and brother-in-law on here today, but other opportunities for this are delayed financing. You know, in a situation where mom and dad maybe are sitting on a batch of cash and they want to help someone secure a property that maybe needs a little bit of repair and or needs is going to be very, very competitive and drive a lot of cash offers. Mom and dad maybe can give a sibling a loan, you know, just a note, not a mortgage, to acquire the property with cash, and then inside of 6 months pull the necessary funds out to, you know, repay mom and dad too. So there's a lot of
mom and dad's important.
Repaying mom and dad is usually important, especially in the Perri family. You know, we don't have all those other gifts, but those are important family house hacks there. Other things that we talk about too when we're working with clients. Hey, we understand if you work in the medical field, we understand all of the different types of pay. Nick obviously has worked as I think you did some work as a CNA maybe at some point.
I did, yeah.
So CNA, RN, CRNA, we understand different types of pay, the escalation of wages, you know, shifts, all of that stuff.
1099, W-2.
Oh yeah, and other things. So you have 1099. What is it? Professional, PLLC? Is that professional? So, you know, self-employed. As you get further and further up the educational ladder, I guess. So CRNAs, nurse practitioners, PAs, are those all 1099 type roles?
You can do them as 1099, you know, as like a side gig, in addition to your W-2 job, or you can do full-time 1099 and just write off business expenses that you may incur. It helps protect you as well. Like you know, from a malpractice standpoint, they're gonna sue that PLLC. You know, hopefully you keep your house. And talking about houses, so just another layer of protection too.
So the good news is they got into their house. They didn't have to pay rent. At over 4.5, 5 years, they made about $100,000 in profit. From a dad's standpoint, I just asked for my down payment, the 10% back, and let the kids use that other money to move into their big house in Peoria now on a golf course. So it really did help both the kids out with that, because it's hard for a young person to save up $100,000, and that's about what you made on that property, right?
Yep.
4.5 years.
And especially young people that are moving into higher paying fields, we know how taxes erode wealth. That little trampoline can change a lot for a family. Other things to consider, we talk about joint and several liabilities. What happens when families want to buy vacation homes, or they want to get into the debt service coverage ratio and acquire houses in areas that, like we're in right now in Santa Rosa Beach, where you're going to have, you know, 48 to 50 weeks of rental in there. The same things apply. Just because we could put an LLC together, Tony, Nick, Tony Sr. LLC, all be 1/3 owners there. We could get a mortgage that's written in Tony, Nick, Tony Sr. mortgage, you know, LLC. However, there's still a joint and several liability, and then there's personal guarantee on that note. So when you hear these hacks on Instagram and TikTok about how you're going to get around all these regulations and you're going to sidestep things and they're not going to report on your credit and you're not going to be personally obligated on these things, those aren't true. We're telling you this from a family perspective. If we were to buy this house, again, Tony, Nick, Tony Sr. LLC, with a debt service coverage ratio loan or any other type of investment property mortgage, we're going to be personally obligated on that debt. What does personal obligation mean? That if we were to default, the creditor would pursue debt collection against all three of us.
Not just one.
Yep. So again, it's not a 300% mortgage. we're all 100% obligated for that same mortgage. That's how joint and several liability works. That's all the boring questions. We did have a couple for Tony Sr. here too, since some people think that he's not in the business or he's kind of hiding out these days. He still is. He's alive and well. This isn't an AI avatar of him.
I'm still here.
But as we tagged this post and brought this stuff up as you being one of the first employees at Realtor.com.
Okay.
As you're starting to see now in 2025, Redfin being acquired by Rocket and Compass and all of this vertical integration, tell us about what it was like sitting around a computer like a bunch of chimps watching the first picture go online.
In the early 90s when you had that of the AOL sound and the 5 realtors are sitting there looking at this screen, and all of a sudden a picture of a house shows up on the internet. I was like, oh my gosh, there's my listing. It's coming a long ways from when the books were being delivered on Tuesday with the real estate to how technology is. A little scary part for me is when one company wants to control the entire transaction from purchase to mortgage to title insurance, and I'm sure there'll be home insurance involved there somewhere too. You have the right to shop. You don't have to utilize Redfin Mortgage. You don't have to utilize Rocket once they acquire Redfin. And shopping is the best way, especially with local lenders. Like, we're in a beautiful resort community in Florida. I wouldn't go with the realtor's financing company. I wouldn't go with the realtor's insurance company. I would make my own choices. You still have that right to do that. The technology is great, but it also, to me, it kind of traps people in a box that they think they have to use it to get the property.
That's one of the more confusing parts. Nick, as a younger home shopper, you've bought 2 homes virtually at this point.
Yeah.
The technology is advancing in that spot. So the first house, it was a couple virtual tours or some FaceTime tours, and the other one, very, very similar thing. A major point in that is those houses aren't coming onto your radar without a proper listing presentation done, professional photography, a well-maintained home, all of that stuff, because you have people that are going to be interested in that. So again, when that agent is sitting down with you, having the conversation about listing your home, professional photography, that should be like a baseline or a standard entry, because you have hardworking young professionals that may have to visit, have to click on buttons and look at pictures and have the real estate agent kind of go through there and actually look at the house for them. Other things to maybe be aware of, as Realtor.com is kind of, it's evolved into a lot of different things. When we click those buttons to contact agent, you're not contacting a listing agent there. You're contacting someone who's basically buying a lead from those companies. And it creates some confusion and some frustration there. I think that's one of the bigger things. Nick, you guys now have transacted in multiple states. There's a lot of confusion. I think in North Carolina, it was actually pretty clean because they were already using buyer agency representation 4 or 5 years ago. So you kind of understood how the commission was going to work. On the Illinois side of things, that world's a little bit different now. So Nick, as a consumer, let me ask you a question. Would you rather know how someone is being paid in the transaction up front? Or would you rather find out later on that, it's all kind of just in a murky puddle of things?
Yeah, I think I'd like the upfront, so that someone's actually on your side to get this sale done, because for my circumstance, someone was taking their phone, like this guy, I finally found a house because I was buying during the time where houses were getting scooped up. You'd call on a house and the next day it was someone already had an offer on it. So this dude was, running to these houses and walking through them on FaceTime with me. So yeah, I know that you'd hate seeing all those fees tacked on there, but he was actually going to work for me. So,
well, I mean, you pay if you have a portfolio and you're having it managed professionally, through a wealth management firm or whatever, you're paying 1 to 1.5% probably for wealth management. Why wouldn't you want to pay a professional realtor to find you the best property? Their commission. I mean, it's the same thing. It's an investment. So that's where everybody gets worked up. Oh, I don't want to pay commissions.
Well, you think about that too. Like if you talk about the 1 to 1.5%, a lot of times you're dealing with $50,000 to $100,000 a lot of time in an IRA. In a house, you're buying $400,000, $500,000. So, the representation cost probably is, it's not 500, 5 times more. But again, having and understanding a real estate agent that's going to explain how they're paid on the buyer agency agreement, and then you agreeing to them representing you, you guys are binding each other for the best possible output for the consumer, and then the consumer knows that you're working for their best possible outcome.
With the realtor we hired in Peoria, had we went to the listing agent on that house, what would we end up getting them all? Beat them down, not beat them down, but they had moved out. Originally, when Nick looked at the house, it was furnished, looked at it a second time, made an offer, and then it was unfurnished. And I think he ended up saving 50 or 75,000.
I don't think 75 less than the listing price. But she was apprehensive to throw an offer like that, but worst they can say is no.
So sum all of this up, vertical integration, maybe not the best thing, but it is happening. You can shop, you can choose local lenders that understand your situations, whether it's, son, daughter moving away to get an advanced degree, or even a bachelor's degree, and the rent market doesn't make sense. You need to buy a house. Maybe you're sold some other house to start to fund college, or you need the 1031 exchange. You need to park it in there. We know how to do that. We've done that as a family. We've transacted as a family. Non-occupying co-borrower, we've transacted as a family. Delayed financing, again, transacted as a family. You've heard it here from someone who actually doesn't work in the mortgage industry. I think would you have a 3-day stint in the business? Blood.
I paid him to stay home.
blood wasn't my thing. So I learned, finance was my jam there. But you heard it from a young professional that one, presenting and understanding the buyer agency agreement and buyer representation, it's something that appeals to them. It doesn't turn them off. And we just know how to, we know how to transact through that. We know how to talk about exit strategy, whether it's, buy, hold for several years and sell, or buy, hold, refinance mom or dad or grandma or grandpa off. And then in that case, Nick holds property for a long time. So we're a lot different than some AI chatbot. We're a legitimate mortgage and real estate family. I think between Tony Sr. and I, we've probably, at any given point in the last 10 years, we've probably transacted on
over
personally 100 to 150 houses that we've owned and bought and sold personally, on top of thousands of mortgage transactions. So wanted to do a family business edition. No comments about Kanye West on that stuff. Yeah, all two of our viewers. But other than that, we're out. It's Ladies' Day. Yesterday was National Tony's Day, so shout out to all the Tonys. 2/3 of the Tonys on this one, and all the other Tonys out there. We will see you guys next week.
I'm done. Cut the show.